Welcome back to Investors Reality. This video is the next in a series looking at the financial implications of the current global crisis and which countries are struggling the most. And in today's video, I want to give you an update on what's going on in Turkey. You see, the latest rate of inflation has just been announced and Turkey has hit a 24-year high. Inflation is now above 85%, and this is obviously very worrisome. So in today's video, we'll look at exactly what's going on with inflation, also look at the key drivers, what's making up those numbers, what's going on particularly with food and transport, which affect everybody in society, particularly the poorest members of society. And then we'll have a look at the data, and then we'll talk about what's going on with regards to the interest rate. Because I don't know if you're aware of this, Turkey has in fact taken a contrarian view. They've decided that the traditional way of dealing with high inflation, of increasing interest rates, is incorrect, it's flawed, and therefore they've decided to start reducing interest rates. And just recently, Turkey introduced another interest rate cut. This is the third consecutive month that they've cut interest rates. And so obviously, we've seen a third consecutive month of record high inflation. So we'll look exactly at what's been going on. We'll look at the longer term picture because Turkey has actually been cutting their rates for more than 12 months now. So we'll see exactly what's happened to inflation over that period, whether there's anything to support this theory that when you got high inflation, you should reduce rates rather than increasing them. Well, then we'll have a look at what's going on with regards to the Turkish lira, the currency in the country, because that's absolutely critical to the success of the economy. But before we get started, I want to welcome you to Investors Reality. This is where I try to analyze some of the current geopolitical events and what impact it could have for the global financial markets as well as the future of finance. So in case you like it, please hit like, smash, subscribe. My name is Nico Arachi and I'm the host of Crypto Never Sleeps and Investors Reality. Turkey is a net importer. It imports more than it exports, and therefore the value of its currency is obviously important because it's having to pay for a lot of those imports in foreign currencies. So it's exchanging its own currency for things like dollars and euros, obviously. And of course, when the value of your own currency is falling, it means that it's costing you even more. Global prices are rising for things like fuel and food. But when your currencies or your currency they are deteriorating in value, the net impact is actually even worse. Inflation in Turkey in October rose 85.5%, which is the highest level that Turkey has seen since June 1998. And this chart shows the monthly movements in inflation over the last 12 months. And as you can see, that there's been 11 consecutive increases in the rate of inflation. So every single month for the last year, inflation has been rising and support 85% inflation into context. So this chart shows the current rates of inflation for the G20. So these are the 20 largest economies in the world, and you can see that Turkey is right at the top of the list. The only other country in the G20 that is anywhere close to Turkey's rates of inflation is Argentina, where the rate is running at 83%. And Argentina is in a complete crisis. When you look at the other countries in the G20, the next highest rate of inflation is the Netherlands at 14.5%, Russia 13.7%, Italy 11.9%, Germany 10%, and the UK 10% as well. And all of those countries, apart from Russia, have identified inflation as their number one target right now. And they are all increasing the interest rates quickly in order to try to bring inflation back down to a more manageable level of 2 to 3%. And this table shows the highest rates of inflation for all countries in the world. And you can see that Turkey is now ranked at number 6. There are only 5 countries anywhere on the globe that have a higher rate of inflation. And all 5 of these countries have major problems. Zimbabwe. Zimbabwe's economy collapsed a number of years ago and has a runaway inflation. Lebanon, Syria, and Sudan, all beautiful places this time of year. However, all their economies are in dire straits, and that's also due to war-related issues. And finally, Venezuela has had a significant financial sanctions applied against them for the last few years. And if you carry on down the list to look at other countries that actually have lower rates of inflation than Turkey, You will see, for example, Sri Lanka is in a state of crisis. Its economy collapsed recently, and then we got Iran, which has been heavily sanctioned and also has major problems. And most of the other countries that are showing here are in the state of crisis or collapse. And the reason why I want to show you this is to give you a better understanding as how to severe the problem in Turkey is right now. So now let's have a look at some of the key drivers for Turkey's inflation and talk about the impact on the population and the economy. Increases in food prices are one of the biggest issues facing Turkey right now. Turkey is a net importer of food products. It imports large volumes of wheat, which is used to produce flour, which is used to produce bread, which is a basic food substance for a lot of people in the country. And this chart shows you the movement in food prices over the last 12 months, and the current rate of food inflation is now up to 99%. And if you look at what's happened over the last 12 months, this time last year, food inflation was already very high at 27%. But over the course of the last 11 months, it has exploded. It increased to 44%, 56%, 64%, 70, 89, 92, 94, 95%. It then did drop slightly in August and September, but it is now touching 100% inflation. So what that means is that the price of food in Turkey today is almost double what it was this time last year. Now the problem with food inflation is that it affects everybody. Everybody has to buy food in order to eat. But this is disproportionately, let's say, it affects the poorest members of society because they are spending a much larger percentage of their budgets on food. You know, they can be up to 90% of all their money, which is going to food. So this is a major problem when you've got 99% food inflation like we have in Turkey right now. Because these poor members of society, they will not have an increase of 99% in their budgets or in their salaries, especially not over the last 12 months. And these people, as we know, generally do not have any savings. So if food doubles in price, it generally means that you can only buy half as much food today and you could this time last year. And that is a major crisis because a lot of people are living on the breadline anyway. And in situations like this, it just means that people have less calories, less food to actually exist on. And that's a very basic fundamental need for all human beings. Now, if you can't afford to buy enough calories or enough food to keep your body fueled, then that means that you'll have less energy, less motivation, and obviously less productive, which obviously also could lead to riots and mass protests. So this obviously also has a direct impact on the economy. It's not just because prices are increasing. But if people can't afford to eat, then they're not going to be able to work as hard. And therefore, there will be a fall in production. And so the output for the country as a whole will start to go down. So this is a really big crisis or a big issue for Turkey. One of the other basic requirements in a modern economy is transport. Now, most people in a developed economy, they need transport to be able to get to their place of work in order to earn some money. Now, this table shows the movements in transport costs in Turkey over the last 12 months. Now, these figures are not shown in percentages. This is an index. So the index would have been established at some data in the past and set at 100. And then all future prices are measured against that index. So the current index of 1,257 means that the cost of transport is increased 12.57 times since that original index was set. But in terms of the context of the last 12 months, we can say that the index back in November 21 was sitting at 615 and it's now at 1,257. So that means that the price of transportation in Turkey has more than doubled over the last 12 months. And the official figures released for October shows that transportation costs are up 117% year on year. So the problem that Turkey has is that transportation costs have two major impacts. Firstly, they affect the ability of people to be able to afford to go to work. And then we got a 117% increase. That means that compared to this time last year, it's costing more than double to take the bus or to go on public transport. And as we know, the poorest members of society simply won't be able to afford that. So then that puts a big question mark as to whether or not they can actually get to work in order to earn money. And if you can't get to work and if you can't earn any money, that means you're unemployed and that the situation becomes even more serious. So that's obviously a major concern from a consumer's perspective. But in terms of the impact on prices, obviously products need to be transported all around the country. So whether that's filling up the supermarket or moving equipment or moving things that you're manufacturing, supports or other destinations, in order to increase transport costs, that will feed into the total cost of production and therefore will have further driver on inflation. So all this becomes quite circular. As transportation costs increase, so does the price of everything else. And it's very difficult to get control of this situation, particularly when you're looking at more than a doubling in price over the past 12 months. Now let's look at the producer prices. Producer prices keeps track of the input costs for producers. So these are companies that are actually creating things. And it is looking at how much all of their costs are increasing month on month. And this metric is often referred to as factory gate prices. So this chart shows the movements in producer prices over the last 12 months, and the current rate is running at 158%. And once again, if you look at the trend, there has been a consistent and quick rise in producer prices over the last 12 months. And there are two major concerns coming out from this data. First, the absolute level, 158% increase in prices for producers, is completely off the scale. When you compare that to the current rates of inflation in Turkey of 85%, it's almost double that extremely high rate. And the reason that that's a concern is that these factory prices haven't even hit the shelves yet. So these are input prices that all of the producers are having to pay. They will then need to pass those increases on in terms of increasing the sales price of all the goods and products. Because if your prices are going up as a business, obviously you need to increase your sales prices in order to maintain some sort of profit margin. So the producer price index is really important because it gives us the heads up as to where the prices are heading. Because these will be the prices on the shelves over the course of the next 3 to 6 months. And the direction is up, obviously. And what it's been telling us from here is that the producer prices are almost double what the rate of inflation is. So that indicates that inflation isn't likely to slow down anytime soon in Turkey. So that's really bad news for Turkish consumers, but it's also bad news for the Turkish economy because Turkey's main industry is in fact manufacturing. So Turkey imports a lot of parts and equipment and then assembles and completes a lot of equipment and then exports finished goods. And the input prices for producers have an influence on the global sales price for all of their finished goods. And the fact that Turkey is currently experiencing a 158% increase in producer prices means that it's going to have to increase its global sales prices. And that could very well mean that Turkey becomes uncompetitive in the global market, because if there are other countries who do not have the same rate of inflation, and as we have seen on the table before, there is only a small number of countries. There's in fact only 5 countries globally that have higher rates of inflation than Turkey. However, none of those countries are currently exporting any products. So every other country in the world has less inflation than Turkey. That means that they won't need to increase their prices as much. So on a net basis, Turkey is becoming more expensive, which means it's less competitive, which means that it could lose more trade going forward. And that would be an absolute disaster from an economic point of view, because if you got less money coming in, it means the balance of trade will become even worse. It will obviously be spending lots more than Turkey is earning. And that then puts further pressure on the Turkish lira, which could drop in value, and it becomes a really, really vicious cycle. So the producer price index of 158 right now is really bad news for the Turkish economy. But now let's talk about the interest rates. And as I mentioned at the start of the video, Turkey decided to take a contrarian view of how to deal with high inflation. And they've started reducing the interest rates at a time when they've got really high rates. So this chart shows the recent movements in interest rates, and you can see that rates were reduced from 14% to 13% on the 19th of August. They were then reduced further to 12% in September, and on the 21st of October, the Turkish central bank introduced a 150 basis reduction in interest rates to the current level of 10.5%. But these recent reductions in interest rates aren't actually the first time that Turkey have followed this policy. You see, we expanded the graph out further, and here you can actually see the interest rate reduction started in September 2021, when the official rate of interest was reduced from 19 to 18. It was then reduced further to 16, 15% in November, and 14% in December 21. Now, at the time when those interest rates reductions started, the rate of inflation in Turkey was sitting at around 20%. And President Erdogan, he decided that rather than increasing interest rates, a reduction would potentially result in inflation falling. But now let's have a look exactly what did happen. This chart shows the movements in inflation over the last 12 months. And you can see that dating back to December 21, when interest rates were reduced from 15 to 14% through to where they are today, there's been a huge increase in inflation. So the 4 consecutive reductions in interest rates that took place in September, October, November, and December 2021 caused inflation to more than double within a 2-month period. Now, obviously, Russia's invasion of Ukraine has had a further impact on inflation rates. So from the data that we have seen, it doesn't look like the rate cutting policy that Turkey is currently following is having the desired impact. It's being done to reduce inflation. But as a result of these cuts, we've only seen inflation rise dramatically, and it is now one of the highest rates in the entire world. Now, as I mentioned, Turkey is a net importer, which means it's having to buy things in the international markets. And when it's having to make those trades, it's having to do those deals in other currencies, either US dollars or euros, or possibly even the Russian ruble at some point in the future. But because the Turkish economy is based on its own currency, the Turkish lira, the exchange rate is critical in terms of the success of the economy. And this chart shows the exchange rate between the Turkish lira and the US dollar over the last 12 months. And as you can see, there's been a significant deterioration in value this time last year, when the US dollar equated to around 9.7 Turkish lira. And today, the exchange rate is closer to 19. So that means that the Turkish lira has almost halved in value over this period. So that's obviously a big disaster from Turkey's perspective. But if you look at the 5-year position, you can see that in 2021, the Turkish lira actually fell by 44% in that year. So over the last 2 years, there's been a massive devaluation in the currency. And what this devaluation in the Turkish lira means is that it proportionately, everything in Turkey is getting even more expensive. So when we talk about the impact of Russia's invasion of Ukraine, we can talk about the price of oil rising to more than $100 a barrel, the price of wheat rising, the price of a lot of other food and commodity prices rising. And that's all bad news for a country like Turkey, because as I said, they're a net importer. So as those prices go up, it's going to cost them even more to buy all of those products. But when you factor in the fall in the value of the lira, it's actually much worse than that. Because if the price of a barrel of oil rises from 80 to 100, if $1 US dollar is trading for 10 Turkish lira, then the cost of that barrel of oil will move from 800 lira to 1,000 lira as a result of the invasion of Ukraine. However, if the value of the lira falls and $1 US dollar is now trading for 20 Turkish lira, then the cost of that barrel of oil will go from 1,600 lira to 2,000 lira. So you can see that the impact of the fall in the value of the currency, it means that on a net basis, it's even more expensive in order to be able to buy that oil. Obviously, the price of oil is rising in the international market, so that's hurting Turkey, right? But as the value of the lira falls, it's hurting even more. And that's what's been happening over the last couple of years for Turkey. Prices have gone up anyway in the international markets, so it would anyway have caused major problems for Turkey and its economy. But the fact that the lira has devalued has accelerated those problems. And that's why we got such high rates of inflation. Because Turkey's importing large amounts of natural gas, oil, and food, and now it's having to pay more in the international markets, and its currency is worth less. So Turkey is having to pay even more in its own currency terms. So what's the conclusion of today's video? Well, it's really severe what's going on in Turkey. Inflation continues to rise month on month, and the new policies that has been reintroduced, implemented over the last few months of dropping interest rates to try to tackle inflation doesn't appear to be working. We are now at a 24-year high. Turkey has the highest rate of inflation of any of the G20 countries and is actually the 6th highest in the world now. So this is, from my point of view, a strong indication that inflation is likely to carry on over the next few months. Now, some market analysts are saying that they think October will have hit the peak, and that is where inflation will top out. But what they're not saying is that it's going to go back to acceptable levels anytime soon. So even if we would see a reduction from 85 to 75 or even 50, that's still extremely high. And that's still unmanageable and unsustainable from Turkey's perspective. And yet another problem Turkey is facing is that it's running short of currency. It doesn't have enough US dollars or euros to be able to keep paying for all of their energy imports. So it's likely that we will see the economy of Turkey contracting. And as you know, the whole world is interconnected. So when Turkey's economy goes into deep recession, it most likely, certainly, will have a knock-on impact to a lot of other economies. And this is obviously happening at the same time as many other countries are seeing contraction, recession anyway. So the situation in Turkey is likely to get worse over the next few months as the global economy moves towards a recession. In case this video gave you any kind of value, then please do me a favor, hit like, smash, subscribe. Please also come and join our live streams. And remember, geopolitics and the future of finance, which is on the blockchain, goes hand in hand. My name is Nico Aracci, and I'm the host of Investors Reality.